Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be diving down back into the chart, seeing what's been going on with the Bitcoin and what might actually happen next. We saw some interesting things that occurred yesterday in terms of invalidations, what this means for Elliott Wave and going further forward. We'll also have a look at some Glassnode data. There's interesting stuff going on there and a new report I also want to go and show you guys. So as we get into this, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, go ahead and subscribe, tap the bell, select all notifications, and you are going to be kept up to date with all the video content that we do here at Cheeky Crypto. Right, with all of that said, done, and out of the way, let's jump on down and let's actually dive into some Glassnode data to start with. Okay, guys, so this is a really interesting report. I kind of want to show this one to you guys before we get into the usual stuff. But here we basically have what is called a hodl waves. In essence, it's a bunch of line graphs that just show you, I guess, the amount of time Bitcoin's been held without any activity. Okay, so at the very top here, you can see that there's a purple section. In essence, that is anything over 10 years. Okay, that basically hasn't been touched. Now, this is all Bitcoin that's ever been created. Okay, so obviously anything over 10 years, this area here is just highlighted. This is the area where you would imagine that maybe keys were lost and stuff like that. So a long period of time, Bitcoin hasn't been touched. Cold storage, lost keys, lost wallets, whatever. And that's kind of where I feel that one sits. Now, there's a 7 to 10 year bucket. In essence, this is actually the blue section just down here. And for the most part, this little area is basically in that kind of cusp of the long-term holding. They bought it super cheap and they're going to see how this thing kind of plays out, or again, lost wallets, etc. Obviously, as we work our way down here, we also have that 5 to 7 year range. Again, this is a pretty long-term hold. They bought it for a few years ago. They haven't done anything with it. Again, same scenario. It's quite a long time, so you've got a really good long-term vision. And it also is something that, there are investors out there that have, bought Bitcoin at stupidly low prices, and it's worth an absolute fortune today, but they are still hodling. And that's kind of where these buckets are fitting. The 3 to 5 year range, again, this is a range where you would expect to see a reasonable amount. Specifically as you start thinking about multiple run cycles. This is kind of where me and Chris would sit if I didn't foolishly sell all my Bitcoin so early. But nonetheless, I say all my Bitcoin, I still got Bitcoin, but not as much as I once had. But ultimately, this is a good range. This is a 14.9% sit in the 3 to 5%. 3 to 5 year range, right? That's nearly 15% of all Bitcoin sits in that range, which means a long-term holding. Again, there are going to probably be in there some lost wallets and etc., keys and all that kind of stuff. But for the most part, this is multi-cycle investors. Okay, these are investors that are buying it, storing it, and seeing long-term value. They see where the future is going, and they're holding. Okay, as we come down to the next levels, we obviously have the 1 to 2 year range, right? And the 1 to 2 year range, it isn't too bad. Actually, the 1 to 2 year range, is 14.4. The 2 to 3 year range is 6.6. So you can see that there's a bit of a gap in there, as in there aren't that many people who have been buying, in 2017, 2018, for example, that haven't already kind of started to move it around a little bit. Obviously, there's the cusp of moving on. Or going lower down, so 2019, 2020 buying opportunities. That's another 14% right there. The 6 to 12 months range, that's 16% of all Bitcoin has been idle for about 6 to 12 months. It hasn't moved for 6 to 12 months, which is really interesting to kind of know about. Obviously, as we start to go down this ranking, then you start to see, okay, you got 3 to 6 months hasn't moved. 1 to 3 months is 9%. 1 week to 1 month is 4%. 1 day to 1 week is 3%. And 24 hours, who's moving Bitcoin around in the last 24 hours isn't even 1%, it's 0.8%. And I found that really interesting. Obviously, everything that's kind of going on here, less than 1% of all the Bitcoin is actually moving around right now. So really interesting kind of stuff. Now, the kind of big takeaway here is that there's a huge pocket in terms of percentages of all Bitcoin that sits in that kind of multi-cycle range, okay? And again, it could be that what we're seeing here is, people who bought maybe at the top of 2017 and they're kind of waiting for a good valuation to kind of come in to maybe leave it. Maybe there's a portion of keys that were lost, hard drives go and do fail, etc. And obviously, the older the Bitcoin is, the less and less, I guess, rigorous structure was in place, right? You didn't have the exchanges like you have today. Way back, you had a lot of paper wallets, lots of hard drive based wallets, and ultimately you led to losing Bitcoin long term. Okay, so we always see a little pinch of salt with that kind of stuff, but if you're really looking at what's kind of going on within the last 12 months, there's some interesting data there, right? We've got 16% in the last 12 months. 6 months is 9%. It's going on to 10%. In the last 1 month is 4%. It hasn't moved in a month. So these are interesting numbers. And obviously in the last, let's say in the last 1 month, we've seen less than 10% of Bitcoin actually moving around, when that is really interesting kind of to understand that. So I really wanted to kind of just highlight this, guys. There's a lot of hodlers out there with Bitcoin. You are seeing volatility in terms of what's going on with the price, but from the hodling side, really interesting kind of data. Obviously from here, I want to kind of just go into the usual couple of my favorite reports, guys. The balance on Bitcoin in the last day. So we can see we actually had a little tiny bit of a push to the upside. Now this does not represent an inflow of significance. What it actually represents is the price of Bitcoin moving. Okay, but again, super low still here, but we're not actually looking at inflows of Bitcoin coming in a really big way. So if I actually show you the inflows, they are green, and you can see here we've had the inflows that are actually coming in, but the outflows are greater than the inflows. And again, that's the net position change report that I like. Here you can see that we actually had a net change, as in an additional 27,000 Bitcoin left exchanges by the time you consider everything going in and everything going out, more left than actually went in total. So really interesting kind of stuff. Yes, the balance on Bitcoin is going up on exchanges, but again, that's in line with the price appreciation of the asset that happened yesterday, and I'll get into that in a moment. But still, we are losing Bitcoin out of the exchanges. We are not gaining Bitcoin into the exchanges as a net change difference. Okay, so really important that we understand that as well. So from the Glassnode data, this is not suggesting bear market. It's actually suggesting the opposite. It's suggesting that we're going to potentially be moving the needle significantly higher with a significant amount of Bitcoin leaving the exchanges. That's going to shock the supply. And we can also see that there's a lot more hodlers in that kind of multi-cycle range. As Bitcoin starts to age inside their wallets, you're able to start to see, what's actually going on there. Were people buying up, potentially, on this way up towards the $65,000 range, a year ago, or even, during the 2020 pandemic, or even the 2019 starting to spike up here, and where we got that false start. Was that actually an accumulation period? And we're seeing people who were potentially moving Bitcoin around back in 2019 still holding today. So interesting kind of stuff going on from that kind of perspective. Okay, so Glassnode data, really encouraging. There's nothing here that's scary in the slightest. So really good, some good confidence coming into the market, I'm hoping. Obviously, this data does not suggest to me that we're bearish. You would see a lot more inflows that outweigh the outflows in bearish scenarios. I mean, even in May, we weren't calling it a bear market, and you don't set all-time highs after, in a bear market. You just don't set all-time highs in a bear market, right? So a bear market would be a very prolonged period of time. What we've seen so far are a very short period of times where Bitcoin's been in bearish kind of moods or phases, however you kind of want to articulate it. I just call it corrective moves. But this is not indicating bearish scenarios in terms of bear market. Price is pulling down, but it actually appears to be more that the whales are pushing the price to very specific areas for accumulation, and then they're withdrawing from the exchanges. Okay, so knowing all of these kind of things from Glassnode, it's all encouraging. What about the actual chart? What about the price movements? What's actually going on here? Well, yesterday we obviously saw invalidation. Okay, and what we mean by this, let me just tidy this up for a second, is we were looking at an ABC down, right? We were looking to try to get into that kind of $31,000 range. We were expecting a bounce from around here to take us down lower. And what we actually saw happen here was the price of Bitcoin steadily move up, right? So we actually saw an A wave up here. Okay, now this is an A wave because, let me grab hold of my pencil here. This is the start of our original A wave, and we crossed it. Okay, that's invalidation. You're not allowed to do that. So therefore, we know that what we actually have coming down here was a really tiny B wave and a C wave down. Okay, so really interesting to kind of see that one play out. And again, that actually falls in line with what you'd expect from an A and a B wave, or an A and a C wave, I should say. They're kind of pretty much where they need to be. Now, up here, we obviously had this invalidation. We had that one red candle here on the hourly, and then we started to see this pullback. Now, this pullback's actually being pretty easy going, and I am expecting us to come down lower. Okay, so here's the thing. If this is one big A wave, which is highly probable that it is, then we should be expecting a B wave down. Okay, and my mouse is playing up with me today, so bear with me. And then obviously we followed that with a C wave up, right? Pretty standard, kind of what you would expect to see, you know, bare minimum. Now, what you're actually seeing here is this kind of stabilization just below the previous high point, and we're trying to really push above it, but we're not closing above it, right? We're kind of finding it as a bit of major resistance up here in that kind of 36,500 range. Okay, and that number is very specific. It is kind of what we hit before on that high point, was 36,499 exactly. Okay, so that we knew that was where we were going to go. We're going to cross that point, or we're going to find a double top and go down. Now here, with that stabilization, what are we actually witnessing? Well, we're witnessing a stochastic RSI increasing, okay, and we should be very aware that this potentially is an A wave down with a B wave up and a C wave down lower that actually might complete our B wave down here before getting that next C wave up, okay? And we can see here there's not a definitive wave count, right? We know that this is an A wave. There's like one red candle here, but you would expect if an ABC was to form in this motion to the upside, we would have a significant or a meaningful move that is about halfway through that would basically allow us to say that the A and the C were equal in length. We aren't seeing that, at least not on the hourly chart. So here we are seeing, you know, a deeper kind of B wave pullback, I would expect. So what we're actually thinking is that we have this A, this B, and then A pull back into C. Now, if I actually just tidy up that move, and we'll just see that for a second, and what I'll do is I'll measure this distance here. We'll pull this over just to the top of this B, and what I'll do is I'll make sure I get that as close as I can for you guys. It's pretty close, so I'll leave that there. Basically, this then shows us with our C wave coming in here at 34,976 approximately. Okay, so that kind of gives us that. Now, if I actually remove that Fibonacci retracement tool, we want to know, does this area actually resonate with a Fibonacci retracement zone of our push up? You know, the thing that actually invalidated the lower low. So let's actually go ahead and do that, and it doesn't actually. So let me just pull this across, and we'll just check to make sure I get this as close as I can. There we go, and then we'll pull that back in here. So in essence, what do we have? Well, we have a potential C wave coming down lower than the 50% retracement on the 1-to-1 ratio. But also we could acknowledge that there is the 618. We could potentially just come down a little bit lower and hit that 618 area. So overwick the 1-to-1 ratio, but find good stability here. Now this would be an interesting point, actually. Let me grab hold of a horizontal ray, and we'll flag up this as well. Let me just grab a hold of that area there. So here we can see that this was a bounce before. So we come down, we bounced to this area, and we also moved up. When we broke it, we fell down much harder. Okay, this comes in at 34,600. Okay, so a little bit lower. I'm going to head and remove that. So we know that that is the area of the 618. Again, I'm just going to quickly measure this distance. And what we want to check here is if we were to go down into that 618 area, would that actually make this an impulsive move down? No, it wouldn't. We'd have to go down to 34,293 before we'd say it's an impulsive move. Okay, so this is kind of what I'm looking at here. There's still the possibility as well, guys, that actually we still continue to move up before we potentially pull back down. And again, we want to be looking out for invalidation, right? In order for this to play out as we'd expect, we want to make sure that Bitcoin does not cross 37,558. If it does, then there's no C wave down, and actually the C waves are, or our whole wave count here needs to be recalibrated for what is happening next, in the same way that we saw here previously. Okay, so we were expecting this. The stochastic RSI still has more room to grow, and this could basically just allow us to trade sideways in and around this area here, before potentially pulling back down into that lower range of $34,000. From here, you would then expect to see, you know, a corrective action again to the upside. Now, we don't know at this point, let me actually just grab this. My mouse is really not happy with me today. So what we'd expect to see here is an ABC. We don't know what that would be like. We don't know how big that's going to be until we actually get the formation of that A wave. Okay, so we'd have to revisit that closer to the time, but you would expect to see reversal to the upside at that particular point in time. But overall, Bitcoin's looking interesting. I think we are not seeing those bearish signals that we need to in terms of bear market signals. We're seeing bearish trends right now on the smaller time frames. But as we kind of scale this up into things like the weekly chart, for example, there's nothing here that is unusual at the moment. We have a nice standard ABC correction after a short push to the upside. And again, you know, what we're looking for here is to make sure that we do not cross that area of $28,000. Crossing that area effectively does mean that we are more than likely going down much, much lower. So we are watching out for that. And this should just be corrective with now an ABC push to the upside, where we want to be tracking. We want to be going after new all-time highs, but we just cannot see it just yet. But you know, $76,000 is there potentially on the horizon here. We just need to kind of see this one play out a little bit more before we can actually call that as a big kind of move to the upside. So for now, heavily oversold on the weekly. We are just coming out of the oversold area on the daily. We are pretty much heading to the overbought area on the 8 hourly. We're already there on the 4 hourly, and we're heading there on the hourly. So the expectation should be a pullback here, and that should be what we should witness. But of course, you know, if you start seeing a lot of short people shorting the market, you are going to get moves like this that we had yesterday, basically liquidating those short positions before potentially coming back down. So you know, ultimately, if you're going to see people going long, you're going to see the price pull back, and if you see people going short, the price is going to go up. Okay, and that's leverage for you. It never works in your favor. But that being said, I'm going to leave the video there. If you have found it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, go ahead and subscribe, tap the bell, select all notifications. If you haven't done so yet, join us on Discord. Links in the description down below. It'd be fantastic to have you there. Fantastic community, talking crypto 24/7. And with all that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.